The crowd looks at the price. We look at the money flow. Price doesn't rise by itself. The community is bleeding to keep it standing. Episode 6. Have you ever wondered, why does the price go up when everything looks bad? Don't believe it's the strength of the crowd. It's the pain in the shark's pocket. To push the price up, the house must pay first. When the market goes sideways for too long and trust runs out, sharks are forced to burn money. Every green candle is an expense. Not to get rich, but to create the illusion of a trend. When the price is high enough, AI will trigger FOMO. At that point, the crowd themselves will throw money in to carry the remaining costs. Sharks take the pain first, but they take it all back in one neat drop. In the 2026 era, algorithms know exactly how much to pump to trigger your greed. If you see the price rising but don't see who's paying for it, you are the product. Ask the chart one question: who is hurting from this pump? If you don't see the shark's sacrifice, you are the one they will harvest at the peak. Don't be stingy with a like for this brutal truth. Subscribe to read the giant's pockets before they swallow your account. Episode 7. The market is not chaotic. You are just looking at the wrong time frame. The market doesn't operate randomly. It breathes. But it doesn't breathe at your pace. It breathes at the pace of the algorithm. Seeing chaos in the 1H candles? Step back. In the world of big funds and AI, your day is just a few 4H breaths. Remember this rule, the time zero. If it takes 12 sessions for the price to crawl from bottom to top, it needs at least 12 sessions to return. It's not fortune telling, it's the inertia of money flow. 12 sessions is the time AI re-evaluates buying versus selling power. When price falls to the lower band, bad news floods in, the crowd panics, sharks stay silent. They create sideways, long enough for you to get bored, long enough for you to leave. Then with just one tiny piece of good news, price flies, and you are out of money. Don't go all in at the upper band. Be patient at the lower band. If a 15 meters candle is green but the 4H is still red, risk is still hanging over your head. AI pumps price fast, but it cannot break the balance. Knowing when to stop is how you survive this 24/7 game. Episode 8. When everyone is raising a glass to celebrate, the truly wealthy are quietly leaving the table. When the whole market is cheering, when the chart is painted green like a victory festival, that is the most dangerous moment. The crowd looks at colors. Sharks look at vitality. Price is still rising, but volume is getting tired. Candles are still green, but bodies are getting shorter. Upper wicks grow long like a gasp for air. That's not strength. It's the final aftershock of an exhausted upward force. Sharks don't leave during sirens. They leave during the music. Small bounces appear not to save the market, but to trap those who still believe. Exiting early is not betraying the trend. It is respecting your capital. When the market is greenest, that's usually when the smart ones start to leave. When price edges up but volume drains, it's a silent confession, the pump is weak. Don't wait for the market to turn red before fleeing. The smart exit while the crowd is still celebrating. Quietly retreat. Turn virtual profits on the screen into real numbers in your wallet. The house's AI will create fake bounces to keep you. But remember, once momentum is lost, collapse is only a matter of time. Episode 9. It's not the market that makes you poor, it's your inability to sit still. After selling and holding cash, a form of torture begins. Not loss, but waiting. Itchy hands, eyes glued to the screen, brain whispering, "Get back in, what if you miss out?" That's when the algorithm is most active. In financial markets, doing nothing is also a position. Cash doesn't yield fast returns, but it gives you the power of choice. When the price crashes 30%, 50%, the one with cash doesn't panic. They choose. Machines can wait, humans cannot. If you can't stand 2 days, 2 weeks, or 2 months holding cash, you will always be prey for fake shakes. The first victory in trading is winning over yourself. Cash is king. It is the power to choose the timing. Don't buy because the price looks cheap. Buy when the market falls into absolute panic. Episode 10. 3 green candles are not a buy signal, they are a greed test. Price doesn't rise in a straight line. It rises in test cycles. Pump 1 candle. Stop. Observe. If the crowd hasn't rushed in, pump a second time, then a third. The third 15 meters green candle is when emotions peak, and also when goods start being dumped on the latecomers. Conversely, the bottom never appears in euphoria. Price must be crushed, go sideways, make the holders exhausted and give up. Only when the market calms down does money flow return. Financial freedom doesn't come when you do more. It comes when you understand who is awake, who is asleep, and who is paying for every breath of the market. We don't teach you to get rich fast. We teach you to read the money flow. Price can lie, volume cannot. If you've listened to this end and are still thinking, you are no longer the crowd. Memorable quotes. 1. Sharks don't pump the price to make you rich, they spend money to buy your euphoria. 2. Every vibrant green candle is a drop of expense blood the house accepts to spill. 3. An uptrend is actually a rose-paved road leading straight to the slaughterhouse. 4. High volume can be the result of wash trading by exchanges. 5. In an exhausted market, low volume can still push the price very far.